my YouTube channel, The Trading Line. So in this video, we are going to see how to buy a stock for investment in Zerodha. Let's say you are planning to invest in two stocks called PFC or ITC. Just for the example, I'm taking these two stocks, but this is not the stock recommendation. Okay, let's see. So this is the place where we are going to watch our stock. So this is simply called watch list. So watch list is a place which is very useful to you to monitor the stocks. Okay, so I'm planning to invest in these two stocks. So I'm going to add that to my watch list. So to add it, so you have to type the stock's name. So my first stock is PFC. So I'm going to type PFC here. So PFC is nothing but Power Finance Corporation. So add it. So you'll be having some other options called like this. Okay, so these are representative of the derivative and some other component of the same stocks, but for the investment you have to definitely add these things. Okay, this is directly related to the stocks, but if you see this one, Jan future and February future, so these things will get expired by January month and February month, as mentioned here in the name itself. Okay, so when you are going to do the investment, you have to buy PFC. So in case if you're a beginner, just do the investment, don't come to trading until you have good understanding on what is going on in the market. Okay, so the next stock which I'm going to add is ITC. So once you type ITC, it came here like this, and this is the thing you are going to add. So we have both NSE and BSE, whatever is you're comfortable with, you can add it. So there won't be any difference. Okay, just add it. So now the PFC is trading around 152 rupees and ITC is trading around 328 rupees. Let's say I am thinking that the PFC is going to give the good return in the upcoming years, and moreover I have seen some breakout based on some analysis, and I have analyzed the stocks, and I think this stock is having good dividend yield record and is good for investment. Then what I will do is I will go. So now let's consider the market is running. So it's after market open, what you can do, you just add the stocks to your stock list and then just click on buy. Okay, so once you click on buy, this is how a window will pop up. So this is called order window. Okay, so you are going to invest that for long term, right? Though, so we have two options here. So intraday and long term. So you have to choose long term and then quantity. So based on the margin requirement, you can based on the margin you have, you can enter the quantity. In case if you have 1500, then you can able to buy around 10 stocks of PFC. Okay, so I'm going to enter 10 and the margin requirement is this amount. So it's around 1500. So once you click on buy, the order will get placed. Okay, so here we have two options. So one is on market order, another one is limit order. Okay, if you click on market order, at whatever the price the share is available at that particular time, it will get triggered and the order get placed successfully. So you will buy the options for that particular place where it is trading now. Okay, in case if you like to buy the stocks for 152, let's say now it is trading around 152.75 and you would like to buy the stocks for 152, then what you have to do is you have to choose this limit order and then enter the price as 152 and click on buy. So once you do that, what will happen is whenever the price is going to reach 152 on the same day, okay, note this down. So it's only on that same day. Okay, so this particular order will be valid for that particular day only. Okay, so when the stock is going to reach 152 on that day itself, if it is going to reach 152, then this order will get triggered. Okay, that's it. So the order will get triggered and your order is successful. Okay, so this is one method of buying the stock. There is another method which is called GTT. So this kind of orders will valid for at least 1 year. Okay, so how to buy the stock? Let's say I think ITC is overvalued 328 and I don't have the time to monitor the stocks on daily basis. Then what I will do is I will just create the GTT. Okay, order the instrument which you would like to buy. So ITC, and here click on create GTT. So now what I am thinking is whenever the ITC is going to reach 300, okay, I'm going to buy the stocks for 10 quantities. Then so here the trigger type you have to select single, so only once it will get executed. Okay, so what I'm going to do is I'm going to enter the quantity. Let's say I'm going to buy 100 quantities ITC when the price is going to reach 300. Okay, so when the price is going to reach 300, this particular order will get triggered. But for the trigger, we have to enter the price. Let's say I'm planning to buy this for 300. Then when the market is going to reach 301, okay, so that is my trigger price. Okay, so when the market is going to reach 301, this order trigger will get triggered. Okay, then the order will be placed in your order window to buy 100 quantities of ITC stock for 300 rupees price. Okay, so here itself you can clearly see that this trigger expires on 1 year after this. Okay, so this type of orders will be valid for 1 year, so you don't need to monitor the stocks every day. So once you think this is the desired level I'm going to buy, you can just buy. Okay, else if you want to even if you want to sell the stock also, you can do it. Okay, so we have two options here. So in case if you have some other stocks in your holdings and you like to sell it when it is reaching certain levels, let's say you buy the ITC now for 328 and you are going to sell it when the ITC is going to reach 400, then for that also you can create it. Okay, so once you have created this GTT, this just click on place. So this order will get placed like this. So whenever the ITC is going to reach this level, let's say 300 or this 301, the trigger will get placed. So once the trigger is triggered, then uh, the order will be available here in the order window. Okay, so when the ITC is going to reach 300, obviously that order will get triggered and it will transfer to your holdings. Okay, so these are the two methods you can buy your stocks. Okay, so there is another method where you can execute number of orders in one click. So that is called basket. Let's say I would like to buy 4 to 5 stocks. Let's say I have plans to buy 17 stocks in Tata groups. Then what I will do is I will add all these stocks to the basket. Okay, so once you have added the stocks to the basket, so here I am planning to buy one quantity in all the stocks of Tata groups. Okay, so for that the required margin is around 22,000, 23,000. Okay, so instead buying it one by one, if I add it here, once I click on execute, if this particular margin is available in my demat account, then the order will get executed. Okay, the same thing I can do whenever I feel like buying the stocks with the Tata groups. Okay, so basket is nothing but you can add number of stocks in one place and you can execute it by just clicking on one click. Let's say if you are doing some intraday trade, let's say I have added some options here. Okay, so these are the things we will be doing for 920 straddle, and I would like to buy the stocks in one. I would like to execute the stocks at the same time. Then I can use this basket. Okay, so once I've added all the quantities here as per my planning, and then once I click on execute, what will happen? Automatically, all these 4 orders will go. Okay, so these 4 orders will get executed. Okay, so you don't need to do it everything separately. So that is the importance of baskets. Okay, so and the fourth one is SIP. So before that we will see the alert. So whenever the stock is going to reach a certain level, then you can do the alert. So based on that also you can buy. Let's say you don't want to create the GTT, you don't have the margin. So in case uh, if you just need the alerts for even for intraday or some other levels, then you can create alerts. So for the alert you have to give me, let's say I am going to create some alerts for Nifty bullish. So I'm going to give the name as Nifty bullish. So I will consider Nifty turned bullish whenever the market lost traded price. So here you have to give the instrument like Nifty 50. So I have given it here. So whenever the market is going to greater than or equal to, let's say 18,500, then I consider the Nifty is bullish. So I will create this. So now you can see that as Nifty bullish is created. So whenever the market is going to reach 18,500, I will get triggered in my phone. So the notification will come to your phone or in your website itself. Okay, so based on that, I will know that okay, now my target is reached. Then I will do what are the strategies I want to implement. Okay, so that's the main purpose of alert. And this one is called SIP. So SIP is nothing but a systematic investment plan. Let's say you would like to invest on stocks on monthly basis. So even I have some basket for that. So here I have some SIP idea, right? So these are my SIP stocks. So I'm planning to buy, every month around 20,000 worth of stocks in ITC, OFS, and Inropil. So these are good dividend stocks. Okay, so these are the good dividend stocks, which is having a good dividend yield record for the last 5 years. And moreover, uh, these are high quality stocks itself. Okay, so I think these stocks are worth buying, so that's why I've added this in my SIP idea. But again, I'm saying, so this is just for some informational purpose, how to use Zerodha effectively. So these are not for the stock recommendations or anything. So in case if you are planning to invest, please consider your financial advisor, or as because else take risk on your own. Okay, so we are not responsible for your investment or your profit or losses. Okay, so you can execute it here like a normal basket order, or else what you can do is you can create a systematic investment plan. So let's say I'm going to create a SIP for, let's say, dividend stocks. Okay, and I'm planning to, so you can add all the baskets, okay, in case if you have the money. So if you don't, then you can add some, but let's say I have some other stocks like this, right? Dividend or SIP idea. I will explain you the SIP idea. So what I'm going to do is I'm going to choose this basket. So this basket is worth of 20,000. So every month 20,000 should be in my account to use this feature, else the order will get triggered and get failed or cancelled, okay, in case of the margin is not available. So the date also you can schedule. So you have monthly schedule of 5 schedule you can do. Okay, that's up to you how you are planning to invest in the stocks. Let's say I'm going to invest in 10th of every month, then what I will do, I will choose 10th date, and I'm going to choose 10 as the time. So when this particular condition is satisfied, then this particular order will get triggered. Okay, so at that time, the so create this first. So now this is get activated. So whenever this particular condition met, 10th of every month, and the schedule is going to be 10th, the time is going to be 10, then this order will get triggered. So in case if you have the amount in your demat account in funds, then this order will get triggered. Else it will get triggered, and due to insufficient funds, it will get cancelled. So if you don't want that to be happen, then you can enable bank mandate. So whenever before the SIP is going to get activated, in case if the enough margin is not in your account, what they will do is they will transfer the amount from your bank account to your demat account, and from there the order will get triggered. So you won't miss your SIP for even a single month. Okay. So these are the plans are very useful for retail investors, and in case if you have less money with you, you can use these kind of techniques. And let's say I have some other techniques which is for good for the investment. I call that as T snacks. So this is nothing but the stocks which are trading around at very low value, and with which is having a good future. So these are the stocks: IRFC, RBNL, Lemon Tree, and some of the stocks are there on the list, like PNB. So these stocks are very trading around trading below 100 rupees. So these are the stocks you can buy whenever you want, right? So you should, so in case if I have 500, I can buy these stocks. So like that also you can plan, instead of spending some money somewhere, so you can save it. Let's say you are planning for 10K budget per month, and you can able to save around 2 to 3K in that. So you what usually we will do is we will use the 3K for the next month expenses, right? So instead that you can invest the 3K here in these kind of simple stocks. Okay, so that if you, so investment is good when it comes to creating the wealth. Okay, trading is fine, but by doing the trading, you won't make wealth. Okay, so once you have traded the money and you started to invest it back to the share market, then only you will be able to create a good wealth. Okay, so that's also whenever you have some little portion of money, which is extra money, you think, and you don't recover that money. So those things you can invest here in the stock market. And moreover, see, what are the money you are going to get to the stock market. That money should be like, okay, tomorrow if that money is not there, I'm not worried about it. So that money is nothing to do with me. So I have good planning with me for the next 6 months or 1 year. So even if the money is not there, I can able to survive. So in those conditions only, you can get those money to the stock market. In case if you recover this money tomorrow, then don't invest in stocks, because when you recover that money, maybe the stocks will get fall, so that you were not able to get the whole money. Okay, so whenever you're going to invest in a stock, so just plan for at least 10 years. So after the 10 years, what are the return you are going to get? Definitely that will be a good return. And moreover, so here I have some stocks for dividend, right? So these investment stocks are giving good dividend around 10 to 15 rupees every year. Okay, the average dividend value for the last 5 years is what's up to be around 5% for this. So and moreover, we have some capital gain also. So if you consider both the things, and maybe by end of the 10th year, you might have collected around 50 percentage of your investment by just by the dividend. And moreover, due to capital gain also, you'll be having some profit. So those things will happen after only 10 years. Okay, so if you invest now and tomorrow itself you would like to well, go the stocks for very high, so that is not going to happen in the stock market. So there are a lot of traders those who are doing by based on some price actions levels, so those things are fine. But in case you don't know anything about the market, just invest it and leave it for next 10 years. Okay, if that is a good company, it will grow and it will give you the good wealth. If it is not, then it will go down. Okay, but what are the money you are going to put for the investment? Just think that as a uh, even if that money is not there, I can able to survive. So in those kind of money only you can get to do the share market investment. Okay, in case if you don't want to take that risk also, then you can invest in ETF bonds, which is giving 7% uh, returns annual. Okay, and liquid bees, and there are a lot of things, cash components and non-cash components, which is giving the good returns without any risk. So those kind of bonds you can invest. So for the retail traders, what I will do is the first 3 to 4 lakhs or 5 lakhs, or at least for 1 lakh, you can invest in bond. So that will be your risk-free investment. So whenever, let's say, you need a emergency capital of around emergency funds of 2 lakhs or 3 lakhs, that you can keep in your bank account, savings bank account itself. In case if you have rest of the money, let's say you have 6 lakh and you need only 3 lakhs for your emergency fund. So you allocated only 3 lakhs as your emergency fund. So the rest, so you have 6 lakhs now. So 3 lakhs for emergency fund. The rest 3 lakhs, what you can do, you can invest in bonds. Okay. So this 6 lakhs is always with you. In case if you have some emergency, you can use the emergency fund as well as this 3 lakhs, because this bonds you can buy and sell at any price, any time. Okay. Maybe there will be light difference, but that is not like stock. So that is not that much, going to navigate. So if you just leave it for 1 or 2 years, that will be fine. Okay, and rest of the money, what are the money you are going to earn after that? In case if you are think, so I have enough money with you and I'm going to do some investment, so those money you can invest in stocks. So first thing, whenever you are going to do the money management, the first thing which should come to your mind is you have to allocate some emergency fund first, and after that you can invest some money in bonds. Okay, then come to shares. Okay, so that's based on your risk and how you are earning and how you are planning for your future. So some people will do it, directly come to the stock market. They started to invest in stock market. Some people will directly come to stock market and do the trading. So that's up to them. Okay, so but the main method. So in case if you don't know anything about the stock market, so this method will work out to be very well. Okay, so that's all about. So again, I'm saying, so these are the things for only for the informational and educational purpose. Okay, in case if you are going to do some trading or investment based on that, please consider a financial advisor. Okay, so I hope this video will be very useful to you guys. Thanks for watching.